Let's look at a few of the top buy and hold growth stocks out there. After a strong start to 2023, investors are looking for the best growth stocks to buy and hold. Palo Alto Networks, strong secular growth tailwinds for one of the industry's few generally accepted accounting principles profitable firms. The Trade Desk, highly profitable with strong growth forecasts over the long term. Salesforce, delivered a strong top and bottom line beat indicative of its future potential. Let's dive in. Here are the 3 best growth stocks to buy now and hold forever. Welcome to Timely Investment Research. After a brutal 2022, we've seen a resurgence in tech stocks so far in 2023. Many stocks in this group have climbed 50% or more so far to start the year. While those types of gains in such a short span seem unsustainable, they do have investors looking for growth stocks to buy and hold. Once in a while, investors must be willing to pull the trigger amid the downtrends the market provides. Scooping up high-quality businesses when a given stock is in a free fall can be terrifying. However, the potential returns with such stocks over a longer time horizon can be much more attractive. Of course, finding quality growth stocks to buy can also be rather difficult. That goes double for more traditional, valuation-based investors. Valuation likely keeps a lot of investors away from high-quality growth stocks. I had trouble with that too. My mindset shifted once I accepted the fact that high-quality, high-growth stocks commanded a premium and always will command a premium. If these stocks ever stop commanding a premium, it essentially means that it has run out of growth. So, without further ado, let's look at a few growth stocks to buy and hold for the long term. Number 1. Palo Alto Networks. Given the current landscape of the technology sector, it's very hard to ignore the secular tailwinds supporting Palo Alto Networks. Regardless of the economic backdrop, bull market versus bear market, recession versus economic expansion, etc., there will always be cybercrime. Cybercriminals will continue to pester, hack, and shake down larger organizations looking for a payout on their attacks. They will continue to go after customer data from retailers while attacking governments, defense contractors, consumers, and corporations. They'll sell that data or information and slash or look for payment to recover it. There's a seemingly endless list of innovative cybercriminal activity, and firms like Palo Alto must stay ahead of it. That's why its business continued to grow throughout 2022. It's why Palo Alto is still growing, and why it's now one of the few generally accepted accounting principles profitable firms in its industry with a long runway of growth ahead. Notably, analysts expect at least 20% annual revenue growth over the next 4 years. That's good enough for me. Number 2. The Trade Desk. The Trade Desk has been one of my favorite growth stocks to buy and hold. While its share price has been through the ringer, suffering a peak-to-trough decline of roughly 64%, shares have been trying to climb higher in 2023. The company has so many positives to assess, it's hard to ignore this name. Co-founder and CEO Jeff Green and his company have built a true industry-leading platform. This platform is one that has not only continued to grow through the bumpy economic climate we're in, but one that can operate all over the world. It's worth pointing out that the Trade Desk can operate in China, a country that Alphabet, Meta, and others don't have access to. It's also worth pointing out that the Trade Desk is a profitable growth stock and has been for quite some time. Amid the bear market, many investors can lose focus of these types of realities. The Trade Desk has strong growth forecasts for the next several years, and analysts expect its bottom line to grow impressively as well. Number 3. Salesforce. It's one thing to buy a stock for the next several quarters or years. It's another thing to buy a stock for a truly long period of time, decades or more. For the latter, they need to be dependable. I really started pounding the table for Salesforce about 6 months ago because the valuation of this company became too attractive. Anyone who has used Salesforce's platform knows just how sticky its products are. Management's commentary about its business, essentially that it's holding just fine through the economic turmoil, combined with its suddenly reasonable valuation, made Salesforce too hard to ignore. Now, there's 5 activist investors involved in the name. They are looking for CEO Mark Benioff to maximize the firm's operating leverage, boosting margins and efficiency. As of last quarter, that's exactly what the company's management team is doing. Salesforce reported a top and bottom line beat, issuing better than expected guidance and reporting very strong cash flow. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, Please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.